I think it's a sign of the overall secular market. I disagree with that this is a bear market. I think it's indicative of buyers wanting to take advantage of the opportunity when markets correct. I think what investors should be doing right here is what I suggested probably 6 weeks ago, and that's take a chart of the S&P 500 in 2016, print it out, and put it on your desk, because I think 2022 is exactly that. So we sit here on March 30th. On March 30th of 2016, you had further advances ahead for the S&P 500 by the year end. Here's the problem. The problem is that the second quarter in 2016 was basically a sideways quarter. If you study, which I do, analytics, the presidential cycle, the 16 quarters, you have now year two, quarter two is the weakest quarter in the 16 quarters of a presidential cycle going back to 1950. In addition to that, the month of April is the strongest quarter for treasuries. So you're entering a period right now where you're going to await earnings. I need some further confirmation from the NASDAQ 100. I wanted to accelerate with a strong degree of momentum and follow through above its 200-day moving average. As I said before, we want the earnings. Listen, you had the Tom Brady bottom when he announced that he was returning to football. Maybe Tiger Woods comes back at the Masters in April, and that resets and reestablishes a further advance higher.
All right. I'm trying to wonder if is my head the only one that's spinning after that dissertation. You maybe need to publish a white paper on all that or something, Joe, because you know.
Yes.
Right,
got the
Doc?
whiteboard.
Anyhow, Rob Sechan today says that he was buying the dips, but now he's not, at least here. He's not looking to add fresh money because maybe we're a little overbought. Doc, you agree with that or disagree?
Well, you just made a case, Scott, for us not being overbought except in a couple of those really big mega cap names. Because you just made the case that, well, you know, we're being led by these 5 or 7 stocks to the upside. And the rest of the market isn't overbought. The rest of the market is, in many cases, you know, making its own correction. You're seeing a pretty significant correction in some of those consumer discretionary plays right now. Restoration Hardware, Williams-Sonoma, a number of those that are just getting clocked right now. Both of those, of course, just had their earnings and posted outlooks that were not favorable in terms of how investors would feel about them immediately after the earnings, and that's why they're hitting the exits. But I would say that we're not broadly overbought. There could be a couple stocks. I don't think Microsoft is. It's still $30, I think, off of its all-time high. I don't think Apple is because of what we anticipate they will be announcing, not just cutbacks in the SE, you know, which is their entry-level phone. That was yesterday's news. But what they're going to be doing, Scott, going forward with both the money they make, to Courtney's point, on the App Store and so forth, as well as, of course, Microsoft with Azure and the cloud. I mean, they must just be killing it right now. And I think that takes them to new all-time highs before the end of the year.
All right, so let's